We've been ripped off for years, and we're not going to be ripped off anymore. No, I'm not going to bend at all. Aluminum or steel or cars, we're not going to bend.
That was the president doubling down on his tariff plans for steel and aluminum yesterday. Spirits now also the focus of this escalating trade war, with a threat of a 200% tariff on wine and other alcohol imports from Europe. Joining us here at Post 9 this morning, Alexander Mikas is the president and COO of Vintus, a U.S. importer of champagne and a number of other French and Italian wines. Thanks for coming in. Good to see you. I do have some friends in the distribution business and spirits, and this was sort of what they've been dreading for a long time. Is it any better or worse than your expectations were?
It was expected that there would be some action in response to perhaps the digital services taxes. The anticipation is, it's almost irrelevant because we lived through it in 2019. So you can have economists, policymakers sort of anticipate what will happen, what the effects will be on the industry. We've already been through it at a much lower level, and it was brutal then.
So were there plans in a drawer that you were just able to pull out and put into effect?
No, you can't plan for a 200% tariff. For us to bring over, let's say, $20 million of wine and have to pay $40 million in customs at port before the wine even arrives, that's just not possible.
How does that change how you sell the wine, for instance? Do you have a customer and they buy it and then you bring it over so you're able to cover that tariff? I mean, how has it changed? Or how will it change, I should say? Those
worst case scenarios are a little bit difficult to pencil out. I think as an industry, what we're trying to do now is just bring the awareness that, we are an importer, but we also sell 25 to 33% of our wines are U.S. wineries. And the effect on the industry will be massive, not just for imported wines. The way our industry is structured, and the reason we felt so much pain in 2019, is importers such as ourselves, distributors, carry a portfolio of wines. 23% of wines sold in the U.S. are from Europe. 23% of spirits sold in the U.S. are from Europe. So distributors carry a full range of wines and spirits, and they don't get to replace one-to-one wines from Europe with wines from the U.S. If you drink apple juice, orange juice, and milk, and the price of orange juice triples, you don't suddenly just drink 3 times the milk, right? It doesn't go one for one, and it's what we experienced in 2019. After 19 years of growth, we were down something like 9% in the 6 months after the tariffs were imposed, which was about 25% off of our projections.
How would you? Oh, I'm sorry. I was going to say, how would you handicap the actual likelihood of getting to 200% implemented?
Well, we completely respect what the administration is trying to do. They're trying to address the trade imbalances. They're trying to lower the deficit, hopefully lower taxes as well. And when the EU, they stepped in it. They removed the suspension of 50% tariffs on U.S. whiskey. So, the intention is correct. Protect American businesses and, fight for U.S. jobs. The issue is that our industry is structured in such a way that it's not possible. U.S. wineries, wineries from abroad, they don't sell directly to retailers and restaurants. They sell to distributors, and distributors sell on to restaurants and retailers. So $1 in wine from Europe actually accounts for $4.52 of U.S. sales. So it's pretty devastating when you look at it that way. No substitution. And, massive job implications.
We've seen a lot of industries try to front run, import a ton before these things go into effect. Can you do that in the spirits business because of the way cycles work?
So, yes, and there has been some loading by some people, but the lessons from 2019 are that it's just not a good idea to have massive inventory. Post-COVID, we still had a hangover of inventory that lasted through 22, 23. And the industry has been declining for 2-3% for the last 4 years. So interest rates being higher than they were in 2019, industry sales declining, there's no appetite to take on that kind of inventory. There just isn't the possibility.
Right. And then we talk about Melissa did a whole documentary about GLP-1s, which we sometimes associate with a changing consumer palate. Is that fair?
Yeah, the market is in a little bit of turmoil. There's all sorts of new products, non-alcohol, marijuana has an impact. I mean, the industry is having a bit of a reset, and this is a little bit this is a bit of a dagger, a potential dagger.
Alexander, we'll watch it. Obviously, there's a lot that gets announced and then reversed and then never happens. But thank you for coming in.
Thanks very much.
Alexander.